This is Agriculture Today. We are joined now by K-State grain economist Dan O'Brien for this week's grain market update. And Dan, before we get into things, thank you so much, as always, for joining us today.
Thank you, Samantha. I appreciate it.
Absolutely. Always appreciate the opportunity to hear from you. And today, like we always do, I understand we want to start with some futures outlooks and what the last week has kind of shown in those market areas.
Well, we've seen with rains coming on, general assumption of transition from a drier for us anyway, La Nina to a generally wetter for the U.S. El Nino. I think that the markets are displaying that they're less worried than maybe they have been in the past about a dry summer coming in. I still think there's just a bunch of questions to be answered about the size of the central southern plains wheat crop, running from Texas to Oklahoma to Kansas, parts of Nebraska, Colorado, you name it. But I think we'll have a chance to refocus on that in the upcoming Kansas Wheat Tour in about 2 weeks. So all that will be there to look at. We'll answer the question for wheat. Does rain make grain? Well, most of the time it does, unless there's been enough damage in that wheat crop and poor enough stands that it would mitigate that. So that's there. So when you ask about the broader issues of what's happened this week, I think general downtrend in the grain markets. We've had a lot of discussions of late about international grain trends and the things you and I have talked about this in the past with regard to Russia-Ukraine issues, and we're still debating in kind of a political football manner whether we'll have trade coming out of Ukraine or not. Will they stop that? I think the term brinksmanship is just prime to add to that geopolitical brinksmanship, to getting down to the end and wringing out what you can get from other parties in high level negotiations. So all that's in play, and so I think I would say, since we're talking about futures trends, like for corn futures, May corn, which is just about to go off the board, i.e. not so much, I guess, off the board, but into its delivery period. We'll start to look at the July contract, but it had been down in early March to about 608, had jumped up to just about 685 or so about 2-3 weeks ago. Now has receded back to about 627. So the fall off we've seen is within the range of where we've been. If we start to go below 608, 610 thereabouts, that's when we'd be all that much more worried. For wheat, the May contract, we're down to 778 3/4 on yesterday's close, and that's almost exactly where we were in early March. So where we go in the next few days is pretty important. If we break lower than that, by the time today's close on Friday is done, then it'll be concerning. So important times to look at. And for soybeans, really pretty similar to corn. We had been down to on the May contract down to about 1405 thereabouts. Again in mid-March, had jumped up to as high as about 1530, have come back down now yesterday to close at 1426. So we're within a day's trade to the downside of moving below where we'd recently been. And when you look at expectations for South America's crop to come through, for Brazil's crop to come through as strong as it is, it's hard to bet against that would happen unless there's some surprise and the harvest results aren't as robust as they had been talking about.
Sure, absolutely. And of course, the flip side of Brazil's harvest, which is coming up, Argentina, of course, short on their crop, as we've been talking about, most likely not a good situation in their neck of the woods.
It's really a comparative horse race between the great results that the market is expecting out of Brazil and the bad and getting worse results that are coming out of Argentina. When you look at South America as a whole, you have basically kind of a balanced situation, balanced outcome between where we were a year or so ago. But again, we keep getting more reports out of Argentina that the soybean crop could move lower, and but by their internal reports, they're lowering their crop estimates. What will the USDA do coming up in that May 12th report? So we'll be looking at that issue for both corn and for soybeans down there. So I don't know. It's hard for I guess all but the most number-driven market analysts to really have a balanced view of what's going on down there when you have these two behemoths in that part of the world ending up with their crops going in different directions. So it's something to watch for us, and it does affect us as we'll come into the next 30 to 60 days, is when we see finally what the results of those crops are, and how they affect foreign trade and some of our supply demand balances.
Sure, especially as, we're getting our crops in the ground here. We've got a large percentage of these crops being planted currently in Kansas. And with the hard freeze of, a week or so ago now, we're going to be talking about some of those issues with Ignacio Ciampity next week, and kind of how to check your fields to make sure everything's still growing as it should. So stay tuned for that if you're interested. But,
Yep.
just a lot of things to consider right now, as always.
Yeah, that's right. I think we try to watch local basis levels, and you've seen some real weakness start to appear in corn basis, a downturn in a lot of key locations in the Colby in Northwest Kansas. You've seen a trend downward in the last 1 or 2 weeks. Well, basis levels recorded last Wednesday on the 26th of April, a sharp drop off for the last couple of weeks, but especially this last week in near Wright, Kansas, in that region. Salina continuing to trend down, sharp drop off in Hutchinson area. Topeka trending lower, more of a sharp drop off in Columbus. So I wonder what that. I guess I wonder what that means. I know the futures have been dropping off as well. I don't know that local demand is necessarily dropping off anymore, unless we really were filled up with that. We have sold off a lot of cattle feeding numbers may be affected. Some worries about what ethanol demand will be going down the road, I guess. But overall, you stand back and look at what's happening locally around Kansas. The weakening of basis is kind of a especially coming in the time frame when normally when farmers are on the tractors, we tend to see basis get to actually become stronger, just to try to entice them to act. So I know what we've done in the last week. I wonder where we'll be in about 3 or 4 weeks, when then it's like, well, not even 3 or 4 weeks, from May 1st to May 15th, when we were planting so much corn, and we'll see what the basis does then. I would add in now, for as much weakness as there is in some of these areas on corn basis that's happening, for soybeans in kind of a surprising manner, we've seen basis levels start to turn to the higher side, and that's not necessarily because of tremendous exports. We just, we're kind of so. We do have concerns. Well, expanding biodiesel production probably affecting that market some. So at the same time that we're planting, we'll be planting soybeans in about a month. A latter part after. Most of the time after we get the corn planted, we look at sorghum and soybeans the latter part of May. But even with that, we're starting to see it. Well, for instance, in the Colby area, in Columbus, in Topeka, parts of the state where we're actually seeing that the local basis, which is the differential between the futures and the cash, start to strengthen some. So that's kind of a welcome thing for anybody still holding soybeans, and perhaps will give new crop marketers something positive to work with as we head on down the road.
Sure. Ignacio was sharing with me not too long ago an interesting trend where people are planting soybeans earlier than they used to in the past. So maybe that's some symptoms of that, maybe, seeing some strengthening in those areas where they're getting soybeans in the ground a bit earlier.
Well, that could be the case. But I guess that when we look at the soybean to corn price ratio in Kansas, and you see what areas of the state we'd have soybean prices stronger than others relative to corn, that for new crop bids, you look at the Salina area where it have a ratio of 2.3 of November soybeans, November 23 soybeans to December corn, 2.3, 2.4 in Topeka, 2.36 in Columbus. So you've got in those areas that's giving all that much more of a signal for the markets, encouraging people to plant soybeans in terms of new crop bids. The place and the place where they need the most feed grains, corn or sorghum, would be in Southwest Kansas, and that ratio is 1.95. Generally, we look at 2.3 as kind of a neutral area, where it's kind of a break even between the two. So in Garden City and Colby, definitely new crop corn price is a little stronger relative to new crop soybean prices. And of course, that's out here in the western third of the state too. So that makes sense, I guess.
Sure. Some interesting dynamics at hand, as always, Dan, and some great insight that you have shared today. You said, in the coming weeks, a lot will probably have shifted. So looking forward to hearing those conversations in the week ahead and seeing really where this all plays out, because once again, still a lot up in the air.
Well, I think I really sense that the markets are assuming all is well, and that all will continue to be well going on into the summer. And from, I guess, if we're hoping for Kansas farmers to have more bushels produced for their revenues, that would be what we hope they're right to some degree. Of course, the best outcome would be for us to have lots of bushels and then prices be sky high. That's for Kansas farmers' revenues. But overall, in the long run, if we have good yields and hopefully the rainfall is coming, and if La Nina comes in and gives us the impact that the market, I think, is assuming will happen, that we'll have good crops, we'll have a moderation in price, and generally that would be, for the most part, a decent income year for Kansas farmers. But I guess in the hand-wringing, being a hand-wringing ag economist that I am, it's not even May yet. And we're assuming great crops, and there's a lot that can happen yet between now and then. And I think that I'm curious if the fall offs we've seen of late will sustain, or if there'll be some set of factors that somewhere in the U.S. or the world that'll come into play and raise prices down the road. But as of now, I think we're going on the assumption of normal crops and a moderation of prices, and we'll see if that holds up all the way to July and August.
Absolutely. Well, you've teed up the conversation for the rest of today's show. As always, you usually do quite well. Dan will be joined later on by Antonina Broyaka. She'll be providing a Black Sea trade update sort of segment there. And then we'll also be joined by Chip Redman, of course, to end this week's programming with our ag weather report. So thanks so much, Dan, for all the information you provided today and for teeing up the rest of today's show.
Thanks. Take care, Samantha.
Absolutely. You as well. Once again, everyone, that was K-State grain economist Dan O'Brien starting today's show with this week's grain market update. We'll be back with more ahead on Agriculture Today.